Palantir stock. Palantir stock is the main subject of today's video. I want to go ahead and react to this video from the Schwab Network. This is a different channel reacting to here today. From a few days ago, in regards to the analyst note about the stock going to $9, I want to react to this, kind of give my opinions on what this gentleman's talking about in regards to Palantir. I thought this was an interesting one, worth reacting to in this one. Next video we'll react to, the second one up, is essentially these gentlemen talking about where they see opportunities in this market, where they don't see opportunities in this market. And I want to kind of share my opinions and perspectives on that one. Thank you for joining me, folks. New all-time high subscribers. I appreciate every single person subscribed to the channel. And my gosh, is it gorgeous. It's probably like 70, maybe 77 degrees out here. Summerlin, Las Vegas, man. Can't ask for better weather than this. When this video is over today, make sure you check out pinned comment down there. How I find 10x stocks. Free workshop for you guys. I put that together. Absolutely free to access that. So make sure you check that out. That will be pinned comment down there when this video is over. Alrighty, guys. Let's get into this. Thanks for being here.
Downgraded today. Every time I look at this company, the inroads they're making in AI, but then I looked at the number of customers that they have. Last quarter, it went up to 161 only. I mean, it seems like this data analytics moving into AI makes sense across the board, but this stock getting pounded today and downgraded.
Yeah, it is. Look at the downgrade today. Citibank basically downgraded to underweight from equal weight, and they've got now basically a price target at $9. And I think the reason being is if you think about artificial intelligence, predictive analytics, data intelligence, if you will, that's essentially the roots of Palantir. And the roots also are really founded in the military. The Department of Defense was a major customer, which actually helped the foundations of Palantir. But the challenges for Palantir is breaching the private sector. They have been moving more so into the private sector realm of the equation. But the challenge also from that standpoint is think about the competition now when it comes down to commercial and enterprise level based customers. Now, if you look at the report last quarter, which was published on the 7th of August, sales only grew about 13%. The total customer count on the commercial side, which is the private sector outside of course, the Department of Defense business they have, grew about 30%. So one would say perhaps that despite the number of customer count increase for Palantir, they may have had to make some concessions to keep existing customers in the private sector on board.
Whoa. Hold your horses. Hold your horses for just a moment. What are we talking about here? Okay. So first off, very important. In regards to Palantir, right? If they're adding a bunch of new customers, that could also be from the perspective of like free trials, or let's call it like paid trials, but without signing the big contract yet, right? Getting people to test out the product. We know a ton of people are interested in Palantir, right? And so, not everybody wants to sign a $100 million deal tomorrow, right? Not everybody wants to sign a $50 million deal, a $200 million deal right away. And so Palantir is a little more white glove service. Here's what we have to offer. Can go ahead and experience that. And then if you like it, we can see the revenue recognition down the road, right? And as we've heard from almost all these companies, including Snowflake, right? 2024 is when you're going to start to see revenue recognized for a lot of these companies on the software side, right? 2024. So everybody just got way too excited thinking, oh, we're going to see all these software revenues in 2023. It's just not happening. Like, you don't even have the hardware really set up yet. Why do you think NVIDIA is selling all these chips, right? Like, you got to put all these pieces together. And so this is just a classic story of like everybody got so excited thinking all the revenue's coming right now. And it's like the revenue's coming, but it's coming next year in regards to this, right? So yeah, to just assume like, oh, they must be taking hits from their other customers or something like that. No, okay.
Their software. So I think this is an interesting situation where we're seeing a divergence of the better playing, if you will, valuation AI-based stocks. I'm going to put NVIDIA out there. Maybe Aristonet is another one that's actually hitting new 52-week highs versus Palantir. Because if you look at the projections last year, they were expecting 30% compound annual growth rates in sales by 2025 or through 2025. Obviously, they missed that last quarter. If you look at the earnings profile for Palantir, they're expecting about 23 cents a share. That's on an adjusted basis for this year. But 2024 is not very meaningful at 26 cents. That's about 12% growth. But the kicker is it's trading around 73 times forward earnings. And so that's about 5 times EBITDA. It's expensive. And I think that's one of the reasons why Citi is downgrading the stock. And I also think one of the other reasons why is there's a lot of competition now at the private sector level, and that's what I think is challenging Palantir.
You know, George, I'm going to read you a quote from the Citigroup note on Palantir.
And by the way, sure, if you only expect Palantir to grow 13%, like they grew last quarter, in the future, sure, the stock is very expensive, but I just think there's a lot of folks that are convinced it's going to be a 20 to 30% type grower and growing the bottom line at way over a 20 to 30% clip. If you add that on for a stock in this industry with a sticky business model, that doesn't seem expensive at all. That's where you get into this divergence between kind of the bulls and the bears and the believers and the not believers in regards to Palantir.
Morgan Stanley,
sorry.
Morgan Stanley
yes,
downgraded.
I thought it was. And it's going to be nightmare fuel for people that are long AI stocks, and that is this. Looking for a tangible revenue contribution from generative AI, and the fact that Palantir had the lack of a monetization strategy. So therefore, George, these people, there's so much excitement about AI, but these people got to find out how to make money from it. And when they do, there's going to be winners, George, and there's going to be losers.
Yeah, there's going to be a lot of ways to make money from this. And, I'll take you back to a great example. Okay, a great example. I remember when Meta went public. Back then it was Facebook. Okay, I remember when they went public, and there was a lot of debate about, how are they going to make money from that? I don't understand. Sure, they got all these people interested in it and using it, but how are they going to make money? That was a real question. I kid you not. That was the main question when Facebook went public. How are they going to make money from it? People were so confused about how they could make money. And nowadays we're just are you kidding me? That was a serious question. I kind of look at this. I'm like, you think if they have all these folks interested, they're not going to be able to make money from this? Are we serious about this? What are we talking about here? Okay, of course they're going to be able to make a lot of money from this, right? So, that's Wall Street being Wall Street. Holy smokes!
Absolutely, I think we're seeing that divergence happening. I mean, it comes down to tangible income, and I think that's where you're going to start to see the divergence away from the competition. In other words, there's a lot of competition out there for the private sector AI. I mean, just think about Google and Microsoft altogether are very competitive in this space. Salesforce also is very competitive in the artificial intelligence area from an ERP or enterprise resource planning software standpoint, or even CRM or customer relations management software standpoint. That's really where Palantir's growth estimates came from. It was the private sector. Now their core business, their core government business, their public sector business is still robust. That's helping keep their business operating. But I think you're just going to see now a valuation divergence. Very expensive AI stocks that have haven't proven themselves from a tangible standpoint to make profits from it yet. I think Palantir fits in that same space, along with C3 AI, by the way, which is symbol AI, versus companies that are tangibly making profits from AI, and that's again some of the hardware companies.
What are we talking about? No one's making profits from an AI except one company in the world. Do you know what the one company in the world that's making profits from AI right now? One company. NVIDIA. Okay, NVIDIA. No one else is making profits from AI right now. Snowflake's not. Microsoft's not making profits from AI right now. They might be making some revenue, but they are not making profits. Amazon's not making profits from AI. AMD's not making profits from AI. Snowflake's not making profits from AI. No one's making profits from AI right now other than NVIDIA. Okay, that's it. They're the infrastructure going in, right? AMD will obviously kick in likely in 24 as another huge infrastructure play in regards to the chip side of things, right, on the hardware side. And then we'll start to see the software kick in a major way in 2024 for a lot of these companies. But let's be clear about this. Don't just act like, Palantir, they're the only ones not making money. No one's making profits from AI outside of NVIDIA right now. Let's be very crystal clear about that.
Aristnet and, of course, NVIDIA.
Yeah, I think some of the inline results have said you got to be patient on a stock like this moving forward as they continue to monetize. All right, thanks to George Tillis joining us, breaking down Palantir.
Yeah, patience is definitely key any times with any growth stock. I mean, growth rates move around, and they move around substantially, and I've never seen it with a company where that hasn't happened. Every growth company I could ever think of has their growth rates move around all the time, including Apple did over time, including Microsoft certainly has had that. Amazon has gone through that. Tesla's gone through that. There's not one growth stock I can ever think of where it was just clear up and up, and it was the same growth rate all the time. These growth rates move around substantially, folks. All right, let's get into this next video up here around some stock opportunities.
Happy Friday. Tom, you are advocating for a balanced portfolio and high-yield municipal bonds, which is music to my ears. Given the PCE and jobs reports we just got, are you sticking with that?
We're sticking with that. It's pretty sanguine reports this week coming out of the economy. The jobs report showed decelerating job gains, but they're not shrinking rapidly. So things are heading back towards the Fed's target in terms of job gains and inflation. So yeah, we're kind of standing pat with our recommendations of high yield munis and some other areas of the bond markets.
Charlie, small and mid-cap value is cheap, you say. That's where you're focused. But I can't help but notice in enterprise tech, there are some big moves to the upside. Even today, during today's trading session, Nutanix, which we reported and heard from the CEO after the bell yesterday, Samsara, which we're going to talk to today as well. Are you perhaps missing out on some growth in other areas?
We've absolutely missed growth in other areas. Not owning NVIDIA and Amazon and Apple has been painful, but that's looking in the rearview mirror. We wish I owned Apple, but I don't. And now I got to look at what's valuable today. And what's valuable today is small and mid cap value stocks, which are trading at extremely attractive prices. And on days like today, we're outperforming. When it looks like the Fed may not do more damage, may not try and take us into a recession, we get great performance from housing-related names, from auto-related names, from financials. And so on days like today, we're outperforming, and we're trying not to look back in that rearview mirror.
Yeah, Charlie, we've seen some pretty big moves in the bond market, not just recently, but all year. But if I just look at the 10-year yield, just a dramatic move lower over the past week, which certainly has reignited this risk-on trade in stocks this week. Just want to get your thoughts on what the bond market is signaling here and how much equity investors should be taking their cues from it.
Thank you for bringing this up, because this is a big point for me. There is.
Before we go further here, something we got to talk about is an elephant in the room in this situation, okay? Small and mid-cap stocks, okay? Small and mid-cap stocks have been cheap since the second half of 2021. I was doing videos even back in the second half of 2021 talking about small caps and mid-caps are cheap. These freaking stocks have been cheap for years now, okay? At some point, yes, they're going to be priced accordingly. But the problem is that getting the timing right of when the smalls and mids make their move, that's been the really difficult part of is it this year? Is it next year? When is this? Eventually it's going to happen and they're going to be priced more appropriately. But these stocks, let's not kid ourselves, have been cheap for 2 years. 2 years now, okay? I remember doing videos in early 2022 talking about how cheap small caps were. They've been cheap. They've been cheap for a while. And at some point it will be reflected. Their true, let's call it, valuations, but dang, man, we've been waiting for a while. I can tell you that we've been waiting for a while.
Sense that the bond market is omniscient, that it can see the future, that an inverted yield curve means we're absolutely going to have a recession. That's nonsense. The stock market and people invested in the stock market have crushed investors who invested in just the bonds. Not only the last 10 years, but 20 years, 100 years. The bond market has produced maybe 1% to 2% real returns, while the stock market is more like 7%. So yes, the bond market got extremely concerned that we were going to have a recession. We went into an inverted yield curve, a lot of that driven by the Fed driving short-term rates up. But 4% 10-year is a normal rate. That's very close to the historic average. So I would say we've settled into a reasonable 10-year rate, and short-term rates are going to come down as the Fed decides it doesn't need to throw us into a recession.
Tom, I want to get your thoughts on this, especially since you call this a chop period right now.
Yeah, we're in a gap now. We've just finished up second quarter corporate earnings. We don't have.
By the way, if anybody's watching this, because I know, sometimes we got people that are super experienced in the market. Sometimes we got people that are, in their first couple of years of investing. When we talk about chop period, that's basically just, you're kind of going nowhere. You're up a little bit, you're down a little bit, you're up a little bit, down a little bit, and the market's just kind of chopping around. But there's really no major move made either way to the downside or upside. So you'll hear that term obviously talked about more in the future, but I just want to make sure everybody understands that.
Fed until the 19th, 20th of September. So we're kind of in this trading range, we think, this broad range, until we see how this all plays out with the consumer. We think of the consumer like being on this treadmill. The Fed's kind of raising interest rates, kind of increasing the steepness of that treadmill. And we're waiting to see if the consumer ultimately capitulates and gets fatigued from higher interest rates. So far this year, that hasn't played out. So far this year, the consumer has been very resilient. You've seen that in the retail sales numbers and strong second quarter GDP. So for now, the consumer is able to hold in.
All right, Charlie, I want to get back to you with some specifics.
Yeah, if you want to know an industry to watch specifically for this next two quarters, to really understand if the consumer's really tapping out or not, watch this specific sector. The industry is restaurants. Watch the restaurant sector. That sector has been hot for, certainly the last probably about a year and a half to 2 years. Very, very hot sector. If we see real weakness and pullback there, that's definitely a sign of consumer tapping. We've seen it from a lot of retailers, right? But we haven't really seen it from that restaurant side. If we see it from there, really like, okay, the consumer is tapped at this point in time if they start cutting back on even restaurant visits. So just something to keep in mind over this next 2 quarters here.
Like names in housing, auto supply, some financial, some energy. Which ones?
I like things that are cheap, and everything you just said, that great companies trading for less than 10 times earnings. So I love Apache trading at 8 times earnings. I love Phinia, which is the powertrain company for internal combustion engines, which are not going away. That's trading for about 9 times earnings. Borg Warner, which makes electric vehicle powertrains, is trading for about 10 times earnings.
I don't know, sir. Have you seen Elon crushing prices of Teslas down and down and down? Jeez. Pretty soon, everybody's going to get a Tesla for free at this point in time, and you won't even have to pay for one. So, yeah, I don't know about that whole statement about ICE vehicles aren't going away. We'll see.
I think Goldman Sachs trading at 1.1 times tangible book. It's had its issues. It made some mistakes in consumer finance, but this stock was 150 10 years ago. Today, it's 340. It's a wonderful company trading at the value.
It's 327, sir.
Of its securities.
Yeah, Tom, just to go back, I guess we're going to take this conversation full circle because you...
Yeah, Goldman Sachs, I've owned Goldman Sachs in the past. Main issue with Goldman Sachs is I feel like they've just kind of lost their identity over the past few years. And it's kind of confusing for investors to look at Goldman Sachs and like, what am I actually buying here? Because then they were trying to go consumer segment and trying to go after, the markets products and like, even like lower tier customers. Like Goldman Sachs has always been known as the guys that work with super rich people, okay, the 1%, right? And then all of a sudden they were trying to pivot to work with, an average Joe. And very, very strange kind of situation there. And so everybody's kind of looking at Goldman Sachs and like, what am I actually buying here? And even that's why even I can't buy Goldman Sachs right now is I'm like, what's actually going on with Goldman Sachs? Like, where's the future of this company? Where's the growth going to come from, right?
You're talking about muni bonds earlier, but high yields municipal bonds, non-agency mortgage-backed securities, and reinsurance. These are areas where you see investment opportunities. Why here? I mean, is what's implied here a soft landing?
What's implied here is that spreads between investment-grade corporates and treasuries are wider than history. So they're already kind of factoring in some recessionary risks. And we just think there's value that we think investors are getting paid to take that additional credit. And reinsurance is just a differentiated income stream. And that's been well rewarded yet this year.
Yeah, nothing else to add there. I appreciate everybody joining me as always. Thanks so much, folks. And busy week ahead. It's actually a surprisingly busy week. We actually got more earnings coming this week, including RH is on my mind. High-end luxury retailer in the furniture space. Really interested to hear what happens at RH there, folks. I appreciate you joining me as always. Thanks for being subscribed. New all-time high subscribers in the history of the channel. Make sure you check out pinned comment down there for that free workshop I put together for you guys, how I find 10x stocks. That should be really valuable to you. Much love and have a great day.